Welcome to 𝐂𝐓𝐇𝐄𝐑𝐄𝐔. We talk about investing, finance, and professional development. As the current time of 8:42 a.m. on Eastern Time on August 6th, Ethereum closed at $1,713, down about 1.4% so far. With respect to this overall Saturday morning so far, we are relatively normalized, flat to down at the moment. With respect to the digestion of what happened on Friday, obviously the mega job report that came out exceeding Wall Street expectation, driving the stock market and obviously the crypto market to be propelling upward. And if you compare the two on both crypto and equity, I would say crypto is a little bit more, I guess, inflationary hedged, which subsequently, allow for higher buying pressure in comparisons to the equity side of the spectrum. But this is just more of a observation, nothing really quantitatively or qualitatively driven. But I'm assuming it's mainly due to the fact that it's more of a commoditized type of asset class with respect to crypto versus equity, which are more obviously operational and company specific driven. Again on the micro affectation front. And on the media front, I would say across the spectrum, obviously yesterday was a positive news, but it was mitigated by a lot of foreshadowed news, regurgitating the fact that yes, it's a positive job report. Yes, we have blown past expectations, but with respect to a robust job growth number in a recessionary environment, especially knowing the fact that inflationary pressure is still something that we're fighting. This might be just one of those, surprise or we got lucky, if you may, right? And something that economists and media, publication companies are saying collectively is that danger is ahead, right? That the U.S. economy, despite this positive job report, when you see, we kind of in this like stage of where we are just like cool and calm and collected, but this is like the calm before storm type of affectation, right? We have not seen the worst yet. We're still kind of lingering on, trying to figure out what's gonna happen. But next thing you know, because of the fact that from the two previous rate hikes, again, those were not like minimal, right? 75 basis point, doing that twice in the course of 2 months is quite sizable, right? And that's driving a lot of pressure onto debt payer, right? It obviously the debt providers love it, but like you can only make these corporate companies and people that have large real estate or investment holding, pay a certain amount of debts, right? There's only amount of threshold that you could breach across, right? So if these two rate hikes do not work out, right, and we see, again, right, we saw the surprise element with an opposite side of the surprise elements. Let's say we missed the ball, like the mark really harshly on the upcoming CPI report, and then in September we missed the mark majorly. That the Fed will be like try to scramble, and they are basically pushed to the corner where they have to kind of raise the rate to 1% altogether. Some of these companies might actually go belly flop and not make it from here. So I'm not sure which side of the spectrum I believe, but again, right, we have to read this news, danger ahead, like with the big warning sign in yellow and black, in your face, might be just fear mongering, right? But again, media front, they also have to be providing some sort of a clickbait, right? Their job is to make ads revenue and stuff like that. So it could be just another regurgitation of a surprise element or just try to stir the fire, if you may. So again, read that with a grain of salt, but ultimately technical doesn't really lie, right? So we should be diving into it. Before I do that, let me just like take a look at some of the news front. Yeah, it seems like there isn't really any specific news that's really in your face. Beside, obviously there's some news talking about the abortion ban post Roe versus Wade. Seems like Indiana becomes the first state to approve abortion ban. Another news that's kind of interesting, but it's more trivial, is with respect to Netflix. It seems like they're expanding its push into video games. Interesting. Obviously, one of my investors in my fund, Tanks Capital, he was the early founders of Netflix when Netflix was still a DVD company back in the day. So it's interesting to see the evolutions and the growth, obviously, of Netflix. Now it's more of a globalized type of phenomenon, right? With respect to the, media, and also the some of the arts and entertainment businesses that it's cultivating so far. So let me just dive right into the technical analysis without wasting more time. With respect to a recording time of 8:48 a.m. on the Eastern Time on Saturday. Ethereum could $1,712, down about 1.5% so far. Right now, we could see that MACD is quite consolidated, right? We're still kind of figuring out which way are we going. And RSI is quite extended. We've been extended for quite some time. You could see that we've been extended since like basically the 17th of July. And we are already kind of like 3.5, 4 weeks in terms of like holding on to the top line. But in terms of like, is this sustainable? Based on historical, every single time we reach at those levels, we have to come down, right? We just have to, right? So I think with respect to the current level right now, is it sustainable? I will say no, absolutely not sustainable. We ideally have to see some sort of a cross down, and I think seeing like somewhere around like 1550, if we break it, obviously 1450 all the way to 1250 is very logical based on the current setup. And we might even see some volatility as we, closing in on the 10th, which is, next Wednesday, on the CPI report depicting on July, right? Is it really matching with the job numbers that we saw so robustly happening on Friday? Or are we going to see more surprise elements, right? So we'll see how that goes. But on the weekly, you could see that clearly we're forming a golden cross. So seeing some more bullishness, again, weeks out would be very possible. And also monthly as well, you could see that we're quite plateau at the moment. And then for Bitcoin, you could see that on the weekly, quite plateau as well, similar to how Ethereum is trading. On the weekly, you could see that clearly we're about to cross up right now. So yeah, golden cross probably form. And on a daily, you could see that clearly we are been holding on for quite some time, ever since on the 19th of July. So can we sustain further? I would say no, because of the fact that we are, every single time we go up, we have to kind of come down, right? But we're not like extremely overbought, right? So seeing some more, maybe, reach, but again, we kind of levitating at the moment based on, you see this mega red candle. So we just basically try to form staircase right now. So we'll see. But this also looks like a upward wedge, which is always a negative sign, right? You could see, like, you could kind of think about this, right? It's kind of like a upward triangle that we're forming right now, like zigzagging upward. But eventually you're gonna lose steam and you're gonna reach to a high level. You kind of have to come down. At the same time, matching with the MACD, which is quite crossed up already. So you need to kind of cross down eventually. But again, weeks out, again, right, as we get over the hump, I think post at CPI report on the 10th, we do have approximately about a month and a half of separation of time period where we can cool off, right? And I think seeing some healthy pressure weeks out again, right, can be possible. And across on the other side of the spectrum, some of them are driven by its own micro affectation, but across the board, I would say, on the daily perspective, quite weak in terms of bullishness, but weeks and months out looks good. Okay. So I appreciate you. Have a good day and stay hydrated and have a great summer. Take care.